All right, I'm going to see you at the event very soon, within a day or two. In this quick prep video, I just want to get your mind thinking about the timing of the market. This is something that people ask us a lot, so I want to address it head on. Is this the right time to get into the market? And we always say at Keyspire, and I'll say it to you, is that it's not about timing the market, it's about time in the market. If you're trying to time the market, then you have a lot greater risk as a real estate investor. You're almost like like a casino style where you're like waiting for it to happen. You want to jump in and jump out because of the timing. The problem with trying to time the market is that you are investing in a platform that you have no control over. No control over the market, no control over what the economy does, or if there's a war in another country, or if oil can't be shipped, or if the president tweets something. You have no control over a whole series of events. And when you're timing the market, you are now hoping that something good happens during that time. Something good happens you don't have control over during that short period of time. So I want you to think about it like that. Like, don't think about timing the market like I'm going to get in at the right time. I'm going to get in at the right time. I want you to think about time in the market. The longer I'm in the market, the better off I am. And that's what we've seen in the data for the last couple hundred years. The longer you are in the market, the better off you are. The longer you are in the market, the better insulated you are to ups and downs of the market. You can make money on the way up when real estate is doing well and crushing it. And we have ways that we're going to show you how to do that on the way up. There's different strategies. You can make money on the way down. And when you're at this sort of bottom or skipping along the bottom like we are today, you know how to make money in that market, but you're insulated. You're insulated because you're not looking to sell today. Your strategy is long-term. So you're going to ride up and down all the way up as real estate, as cash flow, as inflation puts upwards pressure on this asset. And it is a brick and mortar asset, which is really important. When you're investing in the stock market, a lot of people have done really well in the stock market. And if you know what you're doing, you could time the stock market, right? There's volatility there. So you can make a lot of money, but you're going to have this risk where you could also lose money. In the stock market, you can also have a stock or an investment go to zero. And I'm not saying in real estate that can never happen, but you have a hard asset. You have a property somebody can live in, all right? And I'm talking about my bread and butter, where I started, where Scott and I started buying income properties. The baseline, the foundation of real estate investing is buying a property, renting it out to a great family or students or somebody who needs a home, maybe putting in an income suite in the basement to increase the income of that property, increase the value. We're even now looking at putting ADUs, accessory dwelling units, on the property. So we're finding specific purpose-built properties where we can have the room and the zoning for ADUs. That is, when you invest in that, you have lowered your risk to the lowest possible amount. You haven't eliminated it. That's impossible. But your risk is now lower because you have a brick and mortar asset. And when the market goes up, you're going to refinance. You're going to be able to capitalize some tax-free money to grow your business. And when the market goes down, you're going to focus on a number of other things in our checklist to make sure that you are protected when the market goes down and you are earning when the market goes up. But it all has to do with the time in the market, getting that asset and making sure that you are spending time in the market so that that asset can pay you over and over and over again. You know, when we look at the math, we often say the first year of an income property is usually the worst year. The first year is usually the worst year. Now, I'm talking about after a flip to yourself renovation. You're going to learn about flip to yourself. It's absolutely phenomenal what you can do. Getting paid tax-free with flip to yourself. But after you flip it to yourself, after you do your renovation and you do your refinance, the worst year is usually the worst year as an income property. Why? Because most of your mortgage is interest and not principal. Because your rents are the lowest they'll ever be as the rents start to increase. So the worst year is usually the worst year. And so the longer you have your income property, the better that you do, the better the numbers look. So I want to just give you some perspective on time in the market versus timing the market. I want you to think about not timing the market, but I want you to think about spending time in the market. And no matter what market you get in at, you're going to ride that escalator up and down. It's like I heard it like a yo-yo on an escalator. Can you picture that? Yo-yo goes up and down, but if you look at the escalator from the side, you're going to see the yo-yo go up and down all the way up. That's what it's like with the time in the market. And in the last video, we talked about how in this particular market, where we are skipping along the bottom is the upside is more tremendous than it's been in at least a decade now in what we've seen. So I'm excited for you to be at the live event. We're going to talk about these things, and we're going to take you on this systematized journey, a very intentional conversation. So make sure you do not miss any session, because we are going to take you through a journey. So by the end of it, you have clarity as to what you should be doing next. If it's real estate, you have clarity as to the system and what happens in what order. So I'm excited to see you. Get ready, have some fun, time block, lock the door, tell people you're unavailable, because this time is for you, and we are going to make it worth it for you. I'll see you there.